In today's video, I'm going to give you 10 reasons why I choose to stay in margin debt forever with Yieldmax, Cornerstone, and Defiance funds. Yieldmax, Cornerstone, and Defiance help us earn over $300,000 per year in dividends, as you can see below. And our performance value shows that we're beating all of the indexes with our approach using Cornerstone, Yieldmax, Defiance, and some margin debt. We're up 21% for the year, 21.45. The SP is up 14, the Nasdaq's up 16, the Dow's up 4, and the Russell is up only fractionally, 0.18%. So we're beating all the indexes on a year-to-date basis once again, and on a daily basis today we're up $5,000 or 0.48%, which if you look above, that beat the S&P. The S&P was up 0.39 and the Dow was down 0.76. So we're living the fire lifestyle with Cornerstone, Yieldmax, and Defiance, and some margin. And if you need help doing the same, email me for my e-guides at aikentodd48@gmail.com. FIRE stands for Financially Independent, Retire Early. The first reason why I don't worry about margin debt and I always plan to stay in margin debt is because I buy low maintenance names. Cornerstone is 30% maintenance and Yieldmax is 50% maintenance at E-Trade. Okay, so if you look at the margin maintenance requirement here, you'll see Yieldmax again is 50% maintenance and Cornerstone is 30% maintenance. So that's why I put so much of my money in Cornerstone, because it's fully diversified, unlike with Yieldmax. Yieldmax is mainly tech related, so Cornerstone has 30% maintenance and is fully diversified, and it has obviously a 21% dividend that it sets at its NAV every year. The stock has moved up this year, so the dividend has fallen. Cornerstone gives us the total diversification and the 30% maintenance. If you need help understanding maintenance, that's in my volume 3 e-guide. For every $1 you put in your account, you get $4 of purchasing power, and I just use a fraction of that purchasing power to get ahead. So if you look at my margin debt here, you'll see that we're at about $257,000 in margin debt. So my dividends of around $300,000 will pay this back in less than 1 year. So my debt is going to be gone with the dividends just paying it back automatically. But also I have low maintenance names like Cornerstone, so this keeps my available withdrawal high. This is the name of the game when you're using margin and investing with dividends. You want to keep your available withdrawal high, so I can withstand over 30% corrections and still withdraw freely out of my account to live the fire lifestyle. I can swipe my E-Trade card and go wherever I want in this world. I can still add to my debt. I can withdraw, I can travel, I can do whatever I want, buy cars, clothes, shoes, whatever you want with your margin debt. And then my dividends pay that back at the end of the month. I can't even spend the amount of dividends that we earn each month, which are about $27,000 a month. But again, the key is having high available withdrawal. So I don't use all of my purchasing power. I just use a fraction of what can get paid back by my dividends. And then I can withstand over 30% corrections and still withdraw to pay my bills and travel the world and live comfortably. Plus, I'm always insured, so I don't worry about falling over 30% because I always keep put options on. If you look here at my portfolio in my options section, I sell options to make money. Obviously, we collect a lot of premiums in those options, but I have these put options on here. See, SPY put, QQQ put. I always keep them on in the event of a market crash. So if we fall 30%, well, I'm not worried about that because, again, I can withstand that with my high available withdrawal. But if we fall more than 30%, then I have those put options on, which would absolutely clean up in the event of a market downturn. If you need help understanding how I insure my portfolio with put options, that's in my volume 5 e-guide. The other reason why I want to hold this debt forever is because I'm not worried about the debt since I'm completely indexed with Cornerstone. Cornerstone is a 4-star fund, as you can see above, and it moves upward, left, or right on its chart on Morningstar. But if you go to a chart of Cornerstone and E-Trade, you'll see that it goes sideways to down. This is because you have to factor back in dividends, drips, and rights offerings. Cornerstone has 20 to 30% premiums per year that it averages on top of its 20% dividend, so you can get upwards of 40 to 50% gains in Cornerstone, especially if you use the special drip. If you buy Cornerstone up here, it's dripping the dividends down here at the bottom for free money every month. Yes, it seems too good to be true, but when I put the drip on myself for Cornerstone, I found that it was indeed true. All of my members here at Discord are doing the same thing. At Discord here, when you buy my e-guides, you get free access for life to my Discord chat room where we alert you of the Cornerstone rights offering announcement. We also have all these other channels here for your leisure. We have Yieldmax channels, Defiance, Bitcoin, you name it. We have over 1,000 members here pursuing the FIRE lifestyle. And if you have any questions about your brokerage account using margin, they will most likely be able to help you if I can't. And again, we alert you of the Cornerstone rights offering announcement there in Discord. So that's how we're really leveling up our account. Today, Cornerstone, by the way, was up 0.78%. That's how we got these days gains of being up around $5,000, and we beat the S&P. It's because of Cornerstone, and also Yieldmax was up today. Tech was up big. The NASDAQ was up 1.26, but we don't want to follow the NASDAQ exactly because the NASDAQ can fall harder than the S&P or the Dow because it has higher beta. So we were up today because of Yieldmax. We actually beat the S&P, but we were under the NASDAQ. That's right where we want it. We also beat the Dow. We've been buying a lot of Dow Jones names to take advantage of the sector rotation away from tech recently, and those stocks were down today, but our diversification with tech and Cornerstone helped us see the day through and still beat the S&P and earn these days gains here in the process. So we're getting dividends and days gains with Cornerstone, Yieldmax, and Defiance. And a lot of people think that these funds decay and go sideways and you can't make days gains. They just return your money to you and give you the dividend instead, but that's not true. You get best of both worlds with Cornerstone. So I'm always indexed with Cornerstone. If you need help playing Cornerstone and timing it around its rights offerings, that's in my volume 4 e-guide. I'm indexed with Cornerstone, completely indexed. Yieldmax and Defiance are more so tech related, especially Yieldmax. That's very tech concentrated. So I have a blend of Yieldmax, Cornerstone, and Defiance so that I can get the total approach here. Cornerstone gives me those days gains and the dividends. Yieldmax gives me some days gains, but mostly dividends. And then Defiance gives us our dividends, but no days gains really for Defiance. If you go to QQQY here, you'll see that it has a nearly 70% dividend, but it also has 30% maintenance. So that's why I put so much in QQQY over IWMY or JEPY. If you go to other brokers that have lower maintenance for Yieldmax and Defiance, beware of those brokerages because they might not have the special drip for Cornerstone. If you need more help finding out who else does the special drips for your brokerage, we have a brokerage specifics channel here in Discord if you ever need to utilize that resource. Another reason why I choose to stay in margin debt forever is because I can sell these puts at any time and lower my margin debt. So look here at BitX, for example. BitX, we sold puts on this. I earned about $25,000 in premiums just for selling a put on BitX. I sold 7 puts on BitX, and as you can see, strike price is 50 here where my mouse is, and the premiums that were received were $3,100, so $3,000 approximately per contract. And if you do 50 minus 30, you're at around 20. So we control Bitcoin at much lower prices than everyone else does when we sell options. They're a much lower risk way to buy these funds that don't necessarily have dividends, but you don't want the FOMO. And if you see that I'm down in my total gains column, as you can see, the total gains here, down 2,000 or down 400 in BITO. That's not accurate, okay? Options don't give you the true pricing until you're assigned, so you have to factor back in assignment. So if I were to get assigned in BITO and BitX right here, we'd be up significantly. So I get a lot of questions on why are you selling these options when you're down in the total gains column? That's just, again, not accurate. Options go by the midpoint pricing model, so I don't even look at these total gains. I just look at the premiums I receive. So I'm either waiting for assignment in these puts so I can make more money on the long side, or I don't get assigned and I just keep the 3,000 in premiums, and that knocks down my margin even more. I'm not worried about my margin debt and lowering the margin interest because I negotiated down twice. Many of my clients who bought my e-guides did the same thing. When you buy my e-guides, you get free access to the Discord chat room for life, and you get my phone number for life. So just keep this in mind. And so I'm indexed with Cornerstone. I have about 400 grand in Cornerstone and 200 grand in Defiance. I have about 150 grand or so in Yieldmax because they're much more stock specific. They can fall by the amounts of the stocks, and that's what hurts you in margin. Now, I'm not worried about the fall in Yieldmax because they pay you such large dividends that offsets the interest for our margin, and it cash flows us over time no matter what. So I'm using this margin debt, and you really can't lose because if you hold for long enough a 40% dividend in Yieldmax, for example, you're going to cash flow in less than 3 years. So if you get these dividends, they're going to pay down your debt so quickly that there's not even any risk here. But even if the stocks were to fall, okay, and lose some on their share prices, the dividends are going to come and cash flow you regardless. So they're going to pay down your margin and they're going to pay back all of your losses in your position. So that's why I like dividend investing in general with Cornerstone, Yieldmax, and Defiance, because the dividends cash flow all losses, but then they also pay back your margin, okay? And when your margin is paid back, your account grows by the equivalent amount. Unlike with credit cards, if you pay back a credit card, you just are at zero debt and you have no more interest charge. But if you pay back your margin debt here with dividends, then let's say if I earn $300,000 in dividends, my account will go from 787 to over 1 million by the end of the year if the market stays sideways, and my debt will be at zero. I have expenditures in my life. I have bills, and that's about 50 to 60,000 a year that I spend with bills. So my debt will be approximately at zero by the end of the year, and my account will grow by the equivalent amount of my dividends earned. So the dividends cash flow all your losses and they pay back your margin regardless of what the market does. The market can go up, down, sideways, and these plans remain unchanged and uninterrupted. So you can control your whole destiny with margin and dividends. You can set your income with dividends, and then you can increase your income further with the margin, and then the dividends just pay back your margin. And if I ever were to get into some kind of trouble with margin, I can just sell at any time. I've cash flowed my positions already in Cornerstone and mostly in Defiance and Yieldmax, so I could always just sell. If we go over 30% in a correction, I could always just sell and then buy back when the market stabilizes again. But I would never do that because I have high enough available withdrawal to withstand over a 30% correction. And then if we go beyond the 30% correction, I have my put options on, so we would really clean up in the event of a downturn. So I can sell my options at any time and lower my risk there and lower my margin. If you need help selling options, that's in my volume 6 e-guide. And also with options, be aware you have to watch the maintenance in them. And so maintenance is everything. So maintenance is the key to owning Cornerstone, Yieldmax, and Defiance, and to selling options and keeping your available withdrawal high. Okay, and here's some other reasons why I want to stay in debt forever. Look, my dividends pay back my margin debt in less than a year, but I always want to stay in debt, and here's why. Well, I stay in debt because I also want to move the needle in my account. As my account grows, it's harder to stay in line with the indexes because a lot of the funds that we own, Cornerstone, Yieldmax, and Defiance, they go up, yes, but some days the market can be up more than these funds because these funds that we own are lower beta than the indexes themselves. So Defiance will often fall less than the market on a down day, and it will go up less than the market on an up day. So I have to use the leverage to get back my beta in the account and match the indexes one for one. So as my account grows, once again, it's harder to move the needle. So I use the margin debt, the leverage here, to boost my performance because, again, Yieldmax, Cornerstone, and Defiance kind of lag and go sideways to down over time. You have to trade around the highs and lows for Yieldmax, and you have to trade around the rights offerings for Cornerstone. So margin leverage helps us get more performance and make up for the lost beta that these Yieldmax, Cornerstone, and Defiance funds typically show. So we're up 21% for the year, again, beating all the indexes because we use this margin, okay? Yes, we get outperformance because of the dividends from Yieldmax and Cornerstone, but the margin leverage helps us boost our performance and, again, move the needle in my account because as it gets bigger and bigger, your account grows, it's harder to keep up with the indexes and match the performance. So this is how I'm outperforming the indexes. Again, it's with a little bit of margin usage, but only enough to where my dividends can pay that back. You don't want to get over leveraged, not because I'm scared of a margin call, but because you don't want to lose performance. You don't want to over leverage yourself, especially when the market's at the highs, and lose precious performance points as we go lower, because you always want performance because that increases your available withdrawal. Of course, you want to get more available withdrawal so you can withdraw freely out of your account and cushion yourself from a margin call. I also keep my debt on at all times to beat inflation because life is hard and inflation is extremely high. Cash is trash in my opinion, and so I'm getting bigger yields with these Yieldmax, Cornerstone, and Defiance funds, which help me beat inflation. I also use all this margin for a rainy day, okay? I want to keep pushing it always. I want to keep earning my income of over $300,000. I want to push this to $400,000 by the end of the year, and I'm doing this because you never know what can happen in life. You could have a health scare, you could have some kind of issue with your job, so you always want to push it and get more dividends where you can safely. Keep your available withdrawal high with low maintenance names, but you always want to push it to offset a rainy day, okay? You need to have extra earnings, in my opinion, to withstand whatever happens in life outside of your brokerage account. Also, the debt doesn't show up on a credit check, so I can have as much of this on as I want, and the banks don't see it. Yet they see all the dividends that I earn, which act as qualifying income to the banks for loans. That's how I keep leveling up my account. It's not only with Cornerstone and the rights offerings and using some margin, but these dividends help me qualify to banks for more loans. So I can use credit card loans, business loans, personal loans, whatever I need. My dividends help give me whatever I want. Because my dividends are so high, they act like a pay stub, but a much better pay stub. Most jobs you can only earn around $100,000 a year. The median wage in America is around $60,000 to $70,000. So with these dividends, I'm qualifying myself for more loans, and it's acting as a pay stub from a job, which it shows that I'm earning over $300,000 per year in dividends. So you need pay stubs to get loans from the bank, not only to get personal loans to level up your account, but to just buy a house or a car. You have to finance these things, and you have to have good credit, but you also have to have qualifying income. So if you're trying to live free from 9 to 5 and totally live the FIRE lifestyle, you need dividends to act as your pay stub. And my dividends are more reliable than a pay stub because these funds are 4-star and they're based on blue chip funds or the volatility. And let's say a Tesla with Yieldmax, it's based on volatility, not the earnings of Tesla. So I would rely on the volatility to pay my dividends, or these 4-star funds like Cornerstone to pay my dividends over any job any day. Okay, and lastly, you have to have margin debt, in my opinion, just to live some. Okay, it keeps things exciting for me in my account. Having a little margin leverage keeps me alive. It keeps things exciting. I'm growing my account. It always makes me watch my account harder. I watch my risk harder. It makes me a better investor. It makes me a better person in life. I have to spend better. I have to make better decisions with people because everything I do comes out of my brokerage account. So every move I make in life is magnified because I use margin, but I like that. It makes me a better investor and a better person outside of my brokerage account. And last but not least, it's nice to have this margin debt on when it's tied to dividends, not trading. Trading loses 90% of the time. I don't know why people like to trade and take their chances in the market, especially using margin leverage. That's where it gets risky. My dividends cash flow all losses, and the S&P wins over time. It averages 7% gains, whereas 90% of traders lose over time and can't beat the indexes. So it's much more exciting to have a little bit of margin leverage on in your life. And when you do it with dividends, it's much less risky than trading stocks on margin. Okay, so if you need more help doing what I'm doing, email me for my e-guides at akintodd48@gmail.com. When you buy my e-guides, you get free access to the Discord chat room for life and my phone number, so just keep this in mind. And I'll talk to you soon, everyone. Thanks.